Hey guys, this is Apple here with the Apple Corial Real Estate Group, and it's time for another Ask Apple segment where you get to ask me any real estate questions that you might have. So I'm very, very excited for today's topic, which is the most common questions of the home buying process. And I have a special guest here with me, and this is Jeremy Engle with the Engle Mortgage team. So a little bit about Jeremy. Jeremy, hi. Say hello to everybody. Awesome. A little bit about Jeremy. He's been in the business since 2005, and he is actually ranked #1 in the Central Coast and Central Valley area for many, many years, and also 76 in the nation. So he definitely knows loans, and he knows everything that he's talking about. So I'm excited to have him here today. So Jeremy, thank you for sitting here with me today and answering some of the most common questions that our buyers always ask us. So
thanks for having me.
Yeah, no problem. So is there anything that you want to share about yourself first before we get started?
No, I mean, like you said in the introduction, I've done, I've been through it. I've done enough loans where typically, I mean, granted in any business you're going to learn something new every day, but 99% of the time I've ran into the situation that you could see out there, and I'm able to help people through.
Awesome,
anything.
awesome. So in 2017, just real quick, how many loans did you close?
I think 414.
Wow, awesome. And what are you guys looking to close this year for 2018?
We're on the same track to do about the same.
Okay.
We're doing a little bit better than last year, but we should track a little higher, but
Okay.
probably around the same number. I was 402 the year before, so we stayed
Awesome.
pretty consistent.
Great, that's great. That's a lot of loans,
It is.
Okay, so Jeremy, real estate's picking up. We're in our prime season for real estate right now. It's spring season. Everybody feels good. We're getting tax returns and all of that. So we're getting a lot of questions. So my first question for you is, when a buyer is thinking about purchasing a home sometime this year, when's the best time for them to get started on the pre-qualifying process?
I would say as soon as possible on the pre-qualifying process, mainly because even if they don't want to buy a house right now, or they don't want to buy it for the next couple months, we need to find out where they're at. And a lot of people have this misconception that I shouldn't do this until I'm ready to buy a house. The problem with that is a lot of times they won't be ready if they don't find out what we need to fix, or granted, some people come in and everything's perfect and it works day one.
Okay.
But if there is something that were to pop up on a credit report, or a situation with their job where they don't work exactly the right amount of hours, it's something that I could look at really quickly and know that, okay, well, we need to do this before you can buy. And having a little bit of time, or the more time we have to fix a problem, the better. So the answer to that question was as soon as possible, and the reason for that is it's free. It doesn't cost you anything to get pre-approved.
Yeah, absolutely.
And a lot of people have that misconception that, I'm going to go into this and I might not qualify. It's going to cost me money. It's going to hurt, my credit, whatnot. So
Okay.
everything is okay. Everything is free, and you don't know unless you try.
Right. So basically, like what I tell a lot of my clients, whether it's right now that you're going to purchase a home or later down the road, it's really important to understand the process that you need to take to prepare yourself. So with that said, what are some of the things that somebody should think about to help better understand whether or not they're ready?
Sorry, rephrase that question.
So what are some of the things that we can share with buyers out there that are thinking about buying a house? Like, how can they determine that they're ready, that this is a good time for them to buy? Do they need to take a look at their credit scores or financial situation, or?
I mean, basically the first step would be to come see me.
Okay.
Or fill out my application on my website.
Okay.
Once you do that, I'm going to be able to look at the situation and evaluate what, everyone is so different, so it's really hard to generalize, like if you're ready, if you're not. But once I have the facts in front of me and the data, I can put everything together and know, yes, you are qualified. No, you're not qualified today, but here's the steps to get you to be qualified to buy a house at this point in time.
Perfect. Okay. Awesome, sounds good. Now, another common question that we always get when we talk to buyers about pre-qualifying, the first question they say is, well, do I have to pull my credit to know how much I qualify for? So what would be your best?
The answer is absolutely you do. And the negatives to that, a lot of people think their credit score is going to go down. You know, I've been doing this for, 13 years, and I've pulled 10,000 credits, and I've never seen a score affected more than 5 points from pulling it
Oh,
the
wow.
second time.
Oh, wow. That's
And typically when it comes over, it's the same score as it was previous, as they thought they had previously. The main reason we need to do this is, well, there's two things. There's things that are on the credit that they possibly don't know about. And then we need to know what their debt to income ratio is to see
Okay.
if they'll actually qualify. I mean, without pulling credit, all I know is all the positives,
Right.
which are great, but we need to know the negatives to put them together to see what will happen.
Okay.
The other thing is like sometimes they have a collection from a medical collection that they didn't even know about, yet it's just hammering their score. Typically, you can go in and contact the collection agency and resolve this with them if we have a little bit of time.
Okay.
If they wait, like we talked about before, I'm not gonna buy a house for 3 months, I'm gonna pull my credit then. Well, now this collection pops up at the peak time where they're needing to not have it on there.
Gotcha.
And this way we can get them a better interest rate.
Okay.
They might qualify for a higher amount. It's just preparing themselves.
Okay.
And going back to why not?
So it really sounds like without knowing their credit history, we can't really advise them as to what they need to work on, if anything, right? So
Yeah, you like I get phone calls all the time, reaching for these answers, but there's no way I can give an educated scenario or an educated answer without the scenario.
Got it. Okay.
If I only have 3 pieces of the model, but it's a 10-piece model to build it,
Right.
I can't give you the whole
Right.
fact.
So it's like seeing the whole picture first is what we
Yeah,
need to do
you-
before we can piece it all
You
together.
gotta have it, because the
Okay.
worst thing I could do is give you advice on something that I'm missing a piece of that could be
Got it.
detrimental.
Yeah, makes sense, a lot of sense. And, okay, so this is a very, very common question. So if I was a buyer and I'm like, okay, Jeremy, I wanna buy a house, okay, and I'm pre-qualified after meeting with you, how much money do I need to buy a house? How much money do I need to bring in for a down payment?
Okay, so that's another really general question.
Okay.
However,
Is there a rule of thumb?
yes,
Okay,
at certain price points, at certain credit scores, at certain incomes. So it depends. If you're gonna buy, a house for $1 million, you're gonna need, 20% down typically, or at least 10% and a lot of reserves. If you're gonna buy a house between 100,000 and 300,000, there might be down payment assistance programs available to you. Typically, without a down payment assistance program, you would need 3 to 3.5% down.
okay,
There's programs where you could get in with only that amount.
Okay.
If you're a veteran, you can get in with nothing down.
right,
There's a lot of down payment assistance programs, but this takes us back to the first question, where what do you need, or without seeing the whole package, I'm not gonna know, because there's a ton of things that go into what program you're gonna qualify or
Right.
whatnot,
Okay.
And at the end of the day, typically you're always getting a 30-year or 15-year fixed, at least with me. I don't
Yeah.
really try to sell ARM rates or anything of the past that got people into trouble
Okay.
in the past.
So what are the most common loan types that you see come across? I mean, all these loans that you've done.
We probably do the most of FHA and conventional loans.
Okay.
We do quite a bit of VA loans. Being in the Central Valley, being near Lemoore, we get a lot of Navy buyers. We get some USDA in the rural areas, but it's becoming less less people are doing them because they're a little typical, it's harder to qualify for them.
Qualify for 'em.
Yeah, so
Okay.
they end up going FHA,
Okay.
possibly with a down payment assistance or something.
Awesome.
Yeah, and we do a little bit of jumbo because our conforming loan limit in the Central Valley is 453, and with prices shooting up, it's left a lot of people in the, out of that area, so we go into jumbo loans on those.
Gotcha. Okay. And to get more like clarification on all of the specifications of each type of these loans, please, again, we want you guys to meet with Jeremy first and understand exactly what your situation is, so he can better assist in advising you what steps you need to take to move forward. So just moving on, Jeremy, like I mentioned in the beginning, we're in our prime time. It's tax season.
Mhm.
So we're gonna have a lot of buyers that are like, yay, I'm getting a tax return. What do I do with that money? Is it best for me to pay off debt, or should I use that money to use it towards a down payment to get a house?
Yeah.
What do you think?
Back to the same thing. There's a lot of different ways we can use that money. It's great we have that money available.
Mhm.
But once I see the entire picture is when I can tell you. So sometimes like, well, you're gonna qualify for this much if you do, if you pay this debt off,
Mhm.
or you're gonna qualify for this much if you have this much down payment.
Okay.
So yeah, hang on to it until we review your data and see what we can do.
Okay.
Yeah.
So if you are getting a tax return, make sure you hang on to it.
Don't
go
spend it.
it, especially if you're thinking about buying a house this year. So just a little bit of discipline. Let's make sure that we use that money wisely. And of course, we'll have to talk to Jeremy as to what you should do with that money, or what you can do with it as far as buying a house. So I have kind of switching gears here a little bit. Now that our market is really getting aggressive, and we're starting to slowly see more inventory come on the market, what are some of the things for buyers to look out for when making an offer to have a better chance of getting their offer accepted? Because for me as a real estate agent, I'm seeing this a lot right now. Our current buyers are getting outbid with, just very minimal items that we could, had we known in the beginning to do these things, or to not, or to ask for it or not ask for it. What are just a few things that you would advise to look out for?
I would say if you're trying to make your offer stronger, which I think is the
Right.
root of your question,
Yeah.
would be to 100% have a local lender.
Yes.
I always say, like,
Oh my gosh,
if
yes.
I'm selling my house and I have ABC lender from Utah versus, Jeremy Engle or another local good lender, who am I going to choose if they come in apples and apples? Even if the other one comes in a little bit higher, I still might take my realtor's advice and take the other offer due to the fact that I know that I'm going to close, especially when a lot of these buyers today are move-up buyers.
Yeah.
So
That's what
when
we're
they're
seeing a lot
contingent
of.
upon their house selling, they don't want ABC lender from another state screwing that up when there's moving trucks and everything else going in. They want to know that my team's closing it and it's going to happen.
Awesome. Okay.
So that's one thing. I mean, I've seen things that are really cool, like people write letters explaining their family situation.
Yeah, I get that all the time.
And I always look at it like this, like, I'm a seller and I'm looking at two offers that are exactly the same and they're both with a good lender, and I mean, apples and apples. One has a letter explaining me, maybe even with a picture of their family. As a seller, they're not a real estate agent. They're a normal person. They're gonna look at it like, if you're buying an REO, a bank-owned property, it doesn't really matter. But if you're buying from a real seller, I would choose it. I would say, oh wow, this, I'm gonna make the same amount of money. It's not gonna affect me either way.
Right.
Why not take the one that, has something personal and.
I actually just recently went through that with my seller, and I got an offer with the buyer's letter along with a couple of pictures of the family. And he went just a little bit below his asking price to accommodate based off of that.
Yeah.
So I definitely have seen that come across the board as well. So,
The other thing that, using us, a lot of agents know that we can get it done in 21 days.
right, I was just gonna say that. So obviously I've worked with you, I think 7 years now since I've got into real estate. And so for me right now, I know, and I have my trust in you guys, that you guys are gonna close this thing for me in less than 30 days.
Yeah.
So on average, it's a 30 to 45 day escrow timeframe that we see coming across with offers. Do you know your personal average close amount of days?
I do. It varies every month. I think our average is around 32.
Okay.
But take into fact that some of these houses are 60-day escrows.
Mm-hmm.
So there's a lot that are under the 30-day mark. But if there's a 45-day escrow and it's contingent, these people actually can't move sooner than that. So, our numbers we very, very, very rarely do not make an escrow.
Yeah, I know. I think all the years that I've worked with you, I don't think I can think of anything on top of my head on one that, you guys pre-qualified and it didn't close.
Yeah, I have a
So-
99.9% close ratio.
Wow, 99.9% close ratio, you guys.
Yeah, if I write a pre-qual letter, you're getting in the house.
That's awesome.
You know.
Awesome, very cool. Now, is there anything else that you'd like to share with us, as we wrap this up a little bit?
I think the most important thing is we're humans and we want to help other people.
Yeah.
So don't be afraid and, complete our application, call us, ask questions. I think that's pretty much it.
Yeah, okay. So as far as what I'm seeing, inventory is going up. Okay, we're getting a lot more buyers that are coming on the market right now to purchase homes. What are you seeing on the lending side?
Everything's pretty steady,
Okay.
busy. We are seeing rates creeping up, which is, it's unfortunate, but it's a time that we're having because we've been so low for so long. The sticker shock is a little bit difficult because people were used to hearing 3% for so long.
Mm-hmm.
Now when they hear a 3 or a 4 or even a 5, depending on their credit score, it's like, oh my gosh, like what am I gonna do?
Right.
But if you actually forget about the number that's in front of the rate and look at the payment difference, a lot of times it's $40, $50. It's not hundreds of dollars like what people would think.
Okay.
So rates historically are incredibly low still. And
Yeah, I remember you posting something on Facebook and you
Yeah.
were like, even though rates are going up, it's still super low.
Yeah, if you look
Yeah.
at the trend over like the last 30 years, the average rate was 7 or 8%. So we're still way below the
What the
average.
average is.
Yeah.
Awesome.
And if you look at what the cost of renting versus buying and tax incentives and everything else,
Right.
I mean, living in the Central Valley, it's a no-brainer.
Yeah, absolutely.
Yeah.
And especially understanding, our general market and having a great lender on your side to be able to give you all the details of what's most beneficial for you is definitely key as well. So,
Absolutely.
cool. Well, Jeremy, thank you so much for joining us today. Really, really appreciate it. You guys, if you have any questions whatsoever, please, visit jeremyengle.com to start the pre-qualifying process, or you can give their office a call at 559-734-5000. And I am going to be the first to tell you guys that you will be in great hands if you do use the Engle Mortgage team, okay? Thank you so much for watching, and please remember, share this video, and as always, let's talk real estate. Don't forget, Ask Apple. Have a good day.
Thank you.